Good evening. I'm Monsieur de Pomponos. On tonight's episode, CZ outs himself as one of the best Bitcoin counter price indicators ever. Does he even beat Peter Schiff? Pandemonium in the supermarkets. Apparently people believe the virus attacks your butthole.
What the happened yesterday?
Jumping right into the market today in crypto. Red day. Overall market cap of cryptocurrency, $142 billion. Bitcoin bounced and it's back up closer to 5,000 now. It was quite a bit lower earlier.
Who can forget March of 2020? Bitcoin opened the month at $8,764 before the epic market crash just a few days later. Bitcoin peaked above $9,000 before falling almost 60% all the way down to $3,850. Ironically, the very last time Bitcoin would ever see these prices. Now, institutions would begin investing into Bitcoin and funds would submit filings with the SEC to do so in early 2021. After the crash in March, Bitcoin would rally nearly 700%, hitting a high of $29,300 in late December.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Just ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you all had a wonderful weekend. Let's get right into today's episode. In a major step forward in legitimizing Bitcoin across the world, El Salvador becomes the first country to officially recognize Bitcoin as legal tender. And there are already some legitimate rumors that Paraguay could be moving in the same direction. Now, even on the back of all of this incredibly bullish news, we really haven't seen much out of price action these last few days, and volume has been pretty flat as well, letting us know that Bitcoin is indeed gearing up for a serious move. Now, we have been expecting a bounce back up to near at least 43K to go up and retest the 21 exponential moving average, but we have not yet seen any signs that we are going to get that relief rally. Now, price has been moving sideways, as I mentioned, over these last few days with little to no volume, and this is really a bit concerning. It really suggests that the bears are in control of the price right now, and that we may not see that relief rally we've been expecting before some lower price levels. Now, there are a lot of panic sellers in this market right now, and any sort of nudge in that bearish direction could literally send the price tumbling a bit further, especially considering the state of traditional markets after performing incredibly well since the crash we saw last March of 2020. There's no doubt that smart money is looking at these markets with some pretty big hard eyes because they are ripe for some profit taking. So right now, Bitcoin is hovering right around the $36,000 to $36,500 price level, moving mostly sideways over these last few days. But just by looking at this price structure here on the daily time frame, we can certainly tell that Bitcoin is gearing up for a massive move. Now, taking a look here at the indicators, we're going to go ahead and start on the monthly time frame. Now, looking here at the monthly MACD, you can see that we are starting to get that sharp push to the downside. As you can see here, the MACD line is sloping down. Looking at the volume weighted MACD, we get pretty much the same story here as well. Now, last month, we did see a bearish cross here out of the stochastic after being in bullish control territory for literally over a year. The monthly RSI has put in a bit of a bearish divergence here. If you look at the peak in 2017 that you can see here and the peak here, we have a higher high in price but a lower high in the RSI. That is technically bearish divergence. Now, one thing that could happen though, since the RSI technically hasn't fallen down to oversold levels yet on this monthly RSI, this bearish divergence could be invalidated should the bulls step in and start start pushing the price back up to the upside. Now, if we go ahead and zoom into the weekly here, the weekly RSI is attempting to recover a bit, but is still bearish for sure. Looking at the weekly stochastic, again, it is in bearish control territory, signaling that we may have a bit more downside to go before the price starts moving back to the upside. The MACD and the volume weighted MACD, they are both looking pretty good considering the bearish price action we've seen over the last few weeks. And if we go ahead and zoom in here, one thing that we immediately notice right away is this super strong hidden bullish divergence. And considering the strength of the bullish trend on the weekly time frame that Bitcoin is in, this is definitely a great sign for the bulls. Now, we haven't seen much in the way of volume either, really, since price broke bearish out of this head and shoulder structure and bounced off the $30,000 price level before getting quickly bought right back up by the bulls. Now, there are a few different ways to look at this price action right now, and even though there are some logical scenarios that could see Bitcoin break bullish out of this consolidation pattern, I really don't see that happening right now. Here's a few reasons why. I mean, heading into the weekend, the DXY was looking pretty bullish with two bullish divergences here on the daily RSI that have yet to play out. And with this bullish double bottom price structure, we are looking for a move to the upside out of the dollar. Now, a move to the upside here could see about a 3 to a 9% bullish move out of the dollar. The technicals do point towards this move as being a bearish retest of this much larger giant diamond top structure. And if we do get the bearish retest here, which again would be about an 8% move, then we will be looking for the dollar to fall down below 80% on the index, and it would be the first time doing so since 2014. Now, if we go ahead and take a look at the 10-year rate here, the 10-year rate, we can actually see some confluence forming for a bullish bounce out of the dollar. The 10-year rate did break this parabolic structure not too long ago, and we've already seen the bearish retest here, and now it does appear that we may be looking at the 10-year rate falling, a move that would add confluence to a bullish dollar. Now, the last time we saw a move this large out of the dollar was in March of 2020, when demand for the dollar went insane due to the massive sell-off across all markets in response to the global events going on at that time.
Guess what, bitch? Coronavirus! Woo, woo, woo!
Now, I don't want to cause any FUD, but at this point in time, these markets are looking eerily similar to where they were when they crashed in March of last year. The S&P 500 is also looking like it's due for a correction, adding further confluence to the idea of a bullish dollar and falling 10-year rate. Now, a sell-off in traditional markets would not only raise demand for the dollar, it will also likely correlate to a crash in the crypto markets as well, setting up an incredible opportunity to once again get into a nice Bitcoin position near a possible market bottom. Now, some important dates to consider as we move into June here are the 7th, 10th, 14th, and the 21st of June. And we have a Venus-Mars conjunction in mid-July, right on July 12th. Now, all of these dates do line up with relevant astronomical events, something we really haven't gone too far into on this channel just yet. They also coincide with some important Fibonacci time zones that may or may not show significance in some volatility in the Bitcoin price. Now, currently, we do have some buy orders open and waiting over on ByBit. Our first over $32.481 thousand, just in case this is indeed the bottom of this correction. A move back down to test this price level would make a lot of sense, and adding some further confluence to this price level would be the anchored VWAP taken from the point of breakout of this parabolic rally that began last year. The next at 29.87K. Now, I know it would be a lower low, but it's possible we could see Bitcoin explode out of this area. Now, the next is down at 25.4K, right at the 89 weekly exponential moving average. That is a Fibonacci number. That's why I use the 89. And then the next all the way down at 19.5K, which is the 144 weekly exponential. And then our last set of buy orders all the way down here at 17.5 $38.2 thousand. Now, it is still a bit too soon to tell, even though it does appear Bitcoin is headed closer to the apex of this giant bear pennant. It's still not clear what kind of breakout move we're going to get here. Now, the bearish warning signs are pointing towards lower prices, but it would not be surprising at all to see the bulls step in and take control of the price at any moment. But for now, we just wait for orders to get filled, or if there's a breakout to the upside across $38.8 thousand, then we will look for a possible retest entry and ride that price action up near 44, then possibly 52, and maybe even $56,000. But as we continue to move sideways and we really lack any real volume right now, a move down to these lower price levels that we just mentioned is really looking a bit more likely the longer Bitcoin stays below this $40,000 price level. Now, even though I am expecting some bearish price action out of Bitcoin, I remain incredibly bullish heading into the second half of 2021, especially early in 2022. With Bitcoin continuing to move sideways, and as long as the bottom does not fall out in a massive all-encompassing market round sell-off, then we're likely going to see some insane performance out of altcoins over these next couple of weeks to possibly months. In fact, the Ethereum chart is looking pretty damn bullish right now, testing the upper resistance level at $2.8 thousand. Now, if price action is able to break out above this resistance level, then we could be looking at ETH prices heading towards $5,000 pretty quickly. So if you're hoping to make any swaps right now, gas fees are at their lowest they've been all year. It may be a decent idea to take care of those before the price breaks out again, sending gas fees even higher than before. Now, before I let you guys go, I have to let you know that for a limited time, we are giving away free access to our technical analysis of basic training course just in time to help get you prepared for the second half of this bull run. If you're interested in taking the course completely for free, head on over to the website 3candlecollective.com and submit your information today. But that's it. That's all I have for you guys and gals today. Thank you so much for hanging out with me until the end. Don't forget to like, don't forget to subscribe, and don't forget to join the free Telegram group. The link is in the description below, and I'll see you guys in the next video. Peace.